Good morning. You're watching The Market right here on ET Now with me, Aisha Faridi, Anisha Jain, Avan Dabash in the studios. And, well, coming back after a long break, and good to see that the market managed to clock that 18K peak. And, well, while we were off on a trading holiday yesterday, most of the world markets were not. And if you just look at the SGX adjusted rate, it's indicating a 130-point gap up. Don't go by that red tick that you're seeing. That's not adjusted for the day's break yesterday. So we seem to be in good stead. Of course, a lot of global news flow as well to react to. You've got the FOMC meeting as well, which kickstarts this week. But more importantly, news just coming in yesterday or last evening actually about the First Republic buyout, and JP Morgan will be taking over all of its assets. The buyouts comes in after the seizure by regulators. Remember, the bank lost about $102 billion in deposits in the first quarter. So that's pretty much it. That's the global construct. But yes, I guess all eyes are going to be on the FOMC meet. The market is expecting that the FOMC may actually hike rates by 25 basis points to 5 and 5.25%. This, if indeed there is a rate hike, this is going to be the 10th consecutive one. The big question, of course, is can markets digest this at a time when, the global sentiment seems so brittle around all the recessionary talks that we've been seeing?
Oh, well, yes, absolutely. But the big question, of course, with respect to that is whether this is going to be the last rate hike or not, because at least that's what they indicated as per the last dot plot as well. Let's welcome on board Santosh Rao to make sense of all that's happening across the globe. He's head of research and partner at the Manhattan Venture Partners as well. Santosh, hi, good morning. Thank you so much for making time and speaking with us. Well, First Republic was the second biggest failure that we had seen in the US history, the fourth regional bank to collapse since the start of this year itself. But Jamie Dimon now saying that this is perhaps near the bottom. This is perhaps going to be the end. Do you concur with that view?
Well, that's the hope. At this point, we definitely dodged a bullet near term. But normally things don't happen in isolation. There are 2 or 3 events that follow. So I think hopefully he's right. There are not that many. We thought after Silicon Valley Bank we were okay, but then this came up. But this one was there was a run on the bank, the classic run on the bank. So they had to do something. We knew JP Morgan or some big bank would come in. So that was not an issue. We knew there wasn't going to be a contagion effect and all that. So that said, fine, it's contained at this point. So far, so good. So let's wait and see. As Jamie Dimon himself said, this part of the banking sector is contained. So there's no issue here. So unless something else happens on the commercial real estate side, I think we'll be okay at this point.
Yeah, in fact, Jamie Dimon saying he's the CEO of JP Morgan, which has bought out the bank, First Republic, saying that our government invited us and others to step up, and we did. He's saying that this acquisition modestly benefits our company overall. It is accretive to shareholders, if you can just bring out that quote, saying it helps further advance our wealth strategy and it is complementary to our existing franchise, saying that there may be another smaller one, but this pretty much resolves them all. This part of the crisis is over. But Santosh, since you talked about the contagion word, has the market priced any contagion, if at all it be?
It has not. At this point, there's a fear, but it doesn't seem like it's happening. I think the market regulators have managed to really contain this part of the market. I think the bigger issue for the market is not just the banking crisis. If it happens, I think there's enough liquidity and enough tools to manage that. The bigger crisis is the same old inflation fight. Will he raise the rates? The problem is he has to raise the rates because it's baked into the market, the expectations. If he doesn't, then things will look like it's really very bad out there. So he doesn't want that impression to get out there. So he's more focused on that side. The banking is a side issue at this point. It's more about the macro economy, the inflation and the interest rates. So let's wait and see. 25 basis points is a given, but the commentary after that, is he going to say that we're going to stay here at the median rate of 5.1%, which he said that he would do, and just wait and see the lag effect of all the past raises. So let's see if that's what. We don't want any more major issues cropping up. If that happens, I think he'll stay there And the market may ultimately end up being right in terms of him cutting rates down the road. Definitely not this year, but maybe early 2024. Maybe he'll start. But at this point, he's hell bent on fighting this inflation, which is really stubborn. It's not coming down.
Okay, so that's what the expectation is as well from the US Fed. And Santosh, give us a sense as to as well what the outlook is going to be going down the line in terms of, the jobs report as well that's expected. How do you expect investors really to react after digesting all of these data points?
Well, we are in a situation where bad news is good news. So we don't want, I think the expectation is around 180,000 jobs added, lower than last month's 216,000. So it's definitely, the economy is decelerating. We are on the right track there. So we want things to continue. Any worse news is even better because his policy, as far as Chairman Powell is concerned, his policies are working. So we don't want a hot number. We want that or less than 180,000 added. So I think let's wait and see. And things look like it'll be that way. It might be 180 or less because the layoffs are going up, companies are cutting back, the demand side of the equation is weakening slowly, even though the consumer is still relatively healthy, but it's weakening. People are buying down and cutting back. So things like that. So overall demand is weakening. Hopefully it continues and he can start tapping the brakes and ultimately say, you know what, that's it, we're done. That's where the hope is. Let's wait and see. But jobs report is going to be a very important piece of this whole puzzle right now. And if it's a hot number, it's bad. If it's a light number, that's very good.
All right, that is going to be fairly critical and the street will be closely watching out for it. Thank you so much for taking time out and joining in. Time to focus in on our markets. And Aisha, like you said, it has been a lot that transpired over the past few trading days as we did manage to breach the coveted 18,000 mark in trade just last week. You had a lot of support coming in from the large caps, a lot of the rate sensitives as well that powered through, the likes of L&T, Reliance Industries, Kotak Bank, for instance, as well as Bajaj Finance. And of course, the Adani group of stocks did their bit. The broader markets as well weren't far behind with a nice outperformance coming in for the mid and the small cap indices, and the breadth really it told the story on Friday's trading day. You did have not just the large caps, but a lot of stocks within the broader universe, PSUs, real estate, those as well led the gains on Friday's trading day. And over the last 1 month, the index has gained close to 5.8%. We've witnessed the best weekly gains in the last 9 months, and just mapping out how we've panned out over the last 1 month or so, the index, as I said, has gained close to 5.8%. It's been a tremendous rally for the Nifty Bank Index that has fueled gains to a large extent at 8.3% in the last 1 month. And the mid and the small cap indices as well have seen a smart degree of outperformance, with the small cap index, Anisha, gaining close to 9.3% in the last 1 month.
Oh, well, yes, definitely there has been an outperformance when it comes to the broader market versus what we saw in the frontline index, but no complaint even there. 6% gain in a month itself, something that all of us would like at this point of time. And earnings too have been quite supportive, right? Over the weekend, we got the numbers coming in from Kotak Mahindra Bank, and again, it was a better than expected number coming in as far as asset quality is concerned, which was, and then NII also falling ahead of expectations, and that's why the brokerages are maintaining a positive stance. You have CLSA with an outperformed rating. The target price stands at 2,150. Morgan Stanley has an equal weight, but the target price is a good 2,215 rupees. In terms of the deposits, we saw a growth of almost 16% year on year, and the profitability is up as much as 30%. So that's something that the street is liking. However, CLSA has actually downgraded the stock at this point of time because they say that the CEO transition could be an overhang on the stock in the near term. So they're not expecting a runaway rally, maybe a bit of sideways move. So we'll have to watch out for that. But overall, in terms of the numbers, they look quite good. And over the weekend, we did get good numbers from other financials as well, L&T financials, etc. as well, Aisha. But of course, auto data is also something that we all have to watch out for today.
Oh yeah, absolutely. And Kotak Bank as well. That's what the street is going to be reacting to. This is what the report card is looking like. And it's pretty much a decent number, like Anisha highlighted, pretty much all across. Yes, the auto sales data, that's also going to be important. And that's something that the market is going to be reacting to as well. I'm just looking at the key highlights from Maruti Suzuki, for instance. which has actually seen a dip both on a year-on-year as well as on a month-on-month basis. For Tata Motors, it's an uptick, and a handsome one at that, a 13% uptick coming in on a year-on-year basis, 7% on a month-on-month basis. For the CV segment, though, it's not all been as hunky-dory, because Eicher Motors has seen a 45% dip on a month-on-month basis, and Tata Motors has actually seen a dip of nearly about 52%. The report card from the two-wheeler segment as well is not looking all that robust. Be it a Hero MotoCorp, TVS Motors, Eicher has been a bit of a flattish performance. They've all actually seen a dip come by on a month-on-month basis. So if you were to really stack up the scorecard for Motown, it's a below count for Eicher Motors, for Volvo Eicher, for Tata Motors, for Escorts Kubota, even for a Hero MotoCorp, and in line you'd have to say for Maruti as well as TVS Motors. But what's the global opinion this Tuesday morning after a long weekend? Let me take it across to Vinny and get in all the commentary that she's been gathering. Vinny?
Good morning, and let's just talk about the big one that is coming in, and that is obviously in terms of the First Republic Bank, the troubled bank. What happened over the weekend was JP Morgan actually emerged as a winner in the auction to take over First Republic Bank. Now we have a comment that is coming in from Jamie Dimon, who is the CEO at JP Morgan Chase, and he in an analyst call actually mentioned that most part of the crisis that we saw in terms of the US banking side, where the three banks actually saw a collapse coming in, that is mainly over, and maybe we could see another smaller one that could come in, but major and pretty much the big chunk of this issue seems to be resolved, is what he is highlighting. Now let's go and listen into the comment in terms of what Charlie Munger is saying, that he's saying that the US banks are actually packed with a lot of bad loans, and they will be vulnerable in terms of when any issue comes, in terms of the bad times comes. They could see a bit of a vulnerability over there, as property prices have also started seeing a fall. And it is not only nearly bad loans as it was in 2008, is quoting him, but the trouble that happens or to the banking, just like the trouble that happens everywhere else. So yes, that's a highlight that is coming in from Charlie Munger, which seems to be a bit different from Jamie Dimon. Now, moving on to some comments coming in from Lawrence Summer, and this one is on terms of the rate hike cycles that we could see coming in, the inflation, which has been an issue as well. So now Lawrence Summer is actually highlighting that, if the Federal Reserve does what is required in terms of to control the inflation that's taking rate hikes, then we could see a slowdown coming in, and the odds are likely to be happening in sometime the next 12 months that we could see a slowdown, and pretty much thinks that a pretty good, perhaps 70% chances of a slowdown that we could see coming in the next 12 months. Elon Musk also says that the Fed data has too much latency, and maybe a mild recession is already here, is what he's highlighting in terms of the rate hikes over there as well. Moving on to the last comment that we have is coming in from the IBM CEO. AI is obviously taking over jobs, and now IBM CEO is highlighting that around 30% of back office jobs are going to be replaced by AI in the next 5 years. So that is an important update coming in there as well.
All right, thanks very much, Vinny, for giving us a roundup of all the top global opinion. Let's move right on then, and it was a star-studded weekend as we had the Economic Times Awards that took place Friday evening, and our team got a chance to speak with ace industrialist and chairman of the Aditya Birla Group, Kumar Mangalam Birla. Let's hear out a view as to what he had to say.
It's a very good time to be investing by corporate India. I think that so much has happened. NPAs are not there. Most corporates have delevered. The economy is onto a decadal 7 to 8%, 6 to 7 to 8%. That's huge for any large economy in the world. So I think that it's a perfect setting almost to be spending on capex and growing.
You're expanding all your businesses from paint to cement, even fashion, financial services. Given that we've seen a normalization in global growth and the sugar rush post-COVID is getting over, what's your view?
So I think, it has its impact, but at the end of the day, at least for us, we're building businesses for the long term. I don't think 1 quarter, 2 quarters, even a year matters as much. We are an integrated part of the global economy. India is. So you will have oil shocks, you will have commodity prices. So I think agility, risk management have become more important than ever before. And resilience, something that the COVID left us with.
I'm going to quote one of your comments that you have the right to win in the cement sector. And this comment came when after a big M&A happened in the cement sector. You still feel that you're committed and the cement sector, you have the right to win?
Absolutely, without a trace of doubt. We've been there for more than 40 years. Very deep roots across the country in the business. We understand the business very well. I think the repository of talent and knowledge is huge. So pretty much I stand by that.
You are now challenging the paint industry with that big capex which is coming via Grasim. Any of the other industry which you are looking at challenging now?
No, nothing really. I mean, we're also not challenging. We're not coming in from a challenger's mindset. I mean, we are making an investment that's complementary to our existing businesses. And that's how we are viewing it. If in turn it means that we're going to challenge incumbents, so be it. But that's not the driving factor. The driving factor, I think, is the fact that there is huge value creation opportunity for us.
Okay, so that's a star-studded lineup that we have for you this Tuesday morning. But let's try and understand what the markets could do when they open. Kunal and Naresh is always joining us to talk to us about the technicals of the market. Kunal, 18,000 finally there. But from here, are we heading higher, 18,200, 300, or likely to consolidate ahead of the big event with respect to the Fed meeting?
Good morning, Anisha. So, I think after the last 1 month of strong price action, we can expect that the markets would probably take a pause at the 18,200 mark. That's a zone where most of the previous resistances as well as support, they tend to align. So, I think this could be an important pivot zone for the index. And on 18,200 levels on a spot basis, I would believe that we could be in for some sort of consolidation or maybe some sort of volatility which may try and come back again. But again, I think the journey towards the last 1,200, 1,400 points on the index has been quite interesting because we've seen a strong mix of sectors coming back, in large cap stocks making a strong comeback for themselves. So all in all, the bias is positive, but I think at 18,200, we could expect some bit of consolidation. The only encouraging data which happened on Friday previous week was that after a slew of short covering, which we've seen consistently for the indices, both the Nifty and Bank Nifty, on Friday we saw traces of long built up. So I think 6% rise in the open interest for Nifty and I think 3.5-4% rise in the open interest for Bank Nifty. That indicates that long formations have started off, so which means that we could now be getting into a zone where the volatility may ebb down significantly and trends would start to pick up.
Naresh, hi morning. If you were to ebb higher from here and not consolidate for a while, wherein sectorally do you actually see leadership emerging?
So going forward, one sector which continues to do well has been banking, but out here the rotation continues in terms of leadership. For some time it was ICICI Bank, sometime it is recent, in the last couple of sessions it is SBI which has taken the leadership. But it would be the mid cap and the small cap banking space which looks interesting, which is where we are starting to see fresh breakouts. So we are seeing IDFC First Bank trying to make a breakout move, Federal Bank trying to make a breakout move, RBL Bank coming out of nowhere and starting to make a trend. So overall, the mid cap and small cap banking space is one. Second is the public sector enterprises, which are just back to a new 52-week high. So these are the two baskets, and then selective stocks in the mid caps and the small caps is where the movements could be faster.
Yes, and even if you go by results, the likes of RBL Bank, IDFC First Bank have managed to report better than expected numbers. So that's something is definitely which will support the banking space today as well. But let's get some recommendations also from our chartists. Kunal, what are the top recommendations this morning?
So a couple of buy calls, mix of mid caps and large caps. So REC Limited is something which looks extremely interesting on the stock, on the charts. In fact, the stock managed to break out of that 128, 130 barrier for itself. So RSC Limited could be interesting. I would expect at least another 8 to 9% up move after Friday's closing. 140 as a target. Stop loss could be kept at 127. And ITC, a stock which has done exceptionally well. I think that's a stock which continues to march up higher, managed to break past about the 420 levels as well. So would suggest a buy. 415 as a stop loss. Targets at 430.
Right. Naresh, what stocks are you advising this morning?
So, two mid caps. First is a buy on Apollo Hospitals, which is where the stock is setting up for a breakout move above that 4,500 mark. Did so on Thursday and Friday. And also, it has been an underperformer relatively over the last 1.5 years with the hospital space. So out here, it's a triangle breakout, a very contracted range for the last couple of weeks. And now a breakout to take place. A quick target price of 4,900 and stop loss at 4,350. Second is a buy on Tata Power, which has gone through a phase of almost 12 to 18 months of correction. Corrected a good 25% from the highs and has been finding resistance around that 200, 202 mark, which was earlier a support. So looks like a false breakdown done. And if it sustains about 200, we could be looking at a target price of 230 and a stop loss to be kept at 199.
Okay, so those are the top recommendations coming in. Tata Power is something that looks interesting to Naresh at this point of time. But you know what? It was raining exclusives here on ET now on the back of the Economic Times Awards over the weekend as well. Listen in to the biggest market and industry voices as they share their views on the India growth story as well as the road ahead.
If you go by the rule book, if all central banks are responding to the Fed's action almost sequentially, yes, and as a result you find Europe being more exposed to the chance of coming under recession. But I think since the last 1.5 years, gradually our central bank is also decoupling itself. Not that it was entirely linked with the US Fed even earlier, but post the pandemic and post the Russia-Ukraine, the sense that all central banks would look for a direction and move towards that direction sequentially is clearly disproved in the conduct of many emerging market central banks, not just India. So for India, I would think the contagion risk is not really a problem, but the risk is there in the sense when markets to which you largely exported are coming under recession, then the demand is going to fall, your exports are going to suffer. So that risk is definitely there. I'm not eliminating that. But the contagion risk, usually linked to the conduct of the central banks, I would think is not there for us to face.
Our top line growth was 16%, our volume growth was 5%, the price growth was about 11%. And if you look at the last quarter, against that 11% price growth, the price growth has come down to 7.5%. And going forward, the price growth is going to come down even more. You know, every company have their own strategy. As HUL, we will not acquire just because it is fashionable to do so. We look at it from a perspective that does it make a strategic sense for us? Is it a strategic fit? We also evaluate make versus buy. We also look at complementary positioning, the brand positioning, what are the skills the acquisition will bring to us, the capability, and also if the price is right.
Just the last word on rural consumption. We saw first-time tractor companies talking about strong numbers. We've seen a few unlisted companies talking about rural recovery. You're at the heart of it. What is the sense you get?
You know, the good bit is that the top line, headline growth is still there, which indicates that the consumers are spending more money. And if the consumers are spending more money, that's a very good sign.
So you are optimistic on rural recovery?
Oh, absolutely. I'm a born optimist, and we are clearly seeing green shoots. If the prices come down a bit more, the recovery will be even more faster.
All right, getting you snapshots of all the action and some of the big corporate voices at the Economic Times Awards. But let's move right back on to the markets then. And Kotak Mahindra Bank reported a solid Q4. It beat estimates on all counts, and asset quality as well witnessed an improvement. Let's take it across to Harsh, who joins in to do all the number crunching. Harsh?
Well, yes, so we saw NII take a solid jump, 37% year on year, 8% sequentially. We saw NII come in at 6,100 odd crore, and that is largely also on the back of NIM expansion that has come through. And that's a big positive, I would say, for Kotak. We are expecting that number at around 5,900 crore. Let's also look at operating profit. That has really given a beat, and we're seeing a classic play out with regard to leverage here. And we're seeing that operating profit is coming at 4,650 crore versus the sub 4,000 crore that the street was penciling in. So that's a very solid beat. We're looking at provisions largely flat sequentially and extremely low base in Q3. So despite that being flat, and we're seeing that all of those levers are playing out very well on profit after tax. That's coming at around 3,500 crore. It's a very solid 30% jump on a year-on-year basis, 25% up sequentially as well. So solid number there. We're seeing asset quality improvement across metrics, and that's a positive. We're also seeing no pressure on the MSME from an asset quality perspective, and that's also another positive. We're seeing advances growth being quite solid, 18% year-on-year. Deposits also 16.5% year-on-year. So the CASA engine continues to move for Kotak Bank. Of course, they've said that there's been a shift on the SA accounts, and that's obviously on the back of the fact that there are better options now that savers have. So on the back of that, we are seeing a bit of a shift there. With regard to what Uday Kotak also said on the call, he remains positive on the outlook, on the domestic banking outlook, as well as on the domestic macro front. He's also suggesting that CAD now, which is current account deficit now, is much more under control on the macro front. He believes that if the monsoon goes well, the repo may actually come off, but if not, the repo will stay as is. And he believes that the bank will balance both fixed as well as floating. He's open to inorganic expansion. Credit costs are at historic lows, and he believes he's positive on that. And he believes that the bank can continue to grow at 1.5 to 2x of the nominal GDP of India.
Okay, Kunal. Okay, Harsh, thank you so much for bringing us those details as far as Kotak Mahindra Bank is concerned. But let's listen into the commentary coming in from the man himself, Uday Kotak.
I believe we as a bank can grow at 1.5 to 2 times nominal GDP. And I'm just giving you this as a thumb rule. Therefore, if nominal GDP is, say, around 11%, 11 to 11.5%, we should be working in broadly this range, which is what I think is a sustainable basis for any bank to grow over a period of time. Of course, there are many areas where we think we are pushing the envelope and growing even probably faster than the rate of multiple to nominal GDP. If you take a multiple of 2, you come to one number. If you take a multiple of 1.5, you come to one number. And there are specific areas where we can even look at growing faster. So this is our broad outlook and something which I believe is sustainable over a long period of time.
In fact, let's stay on with the earnings calendar, and Ultratech reported also its numbers. Let me take it across to Mansi Dave, my colleague, who's going to break down the numbers for us.
Cement major Ultratech Cement reported its Q4 FY23 results, and in the results, the company did witness a downturn in the profit around 36%. However, due to the increase in demand, the sales figure did see an uptick of around 18% from 15,767 crores to 18,562 crores. However, the margins did see a dip from 19% to 17%. Coming at the highlights of the numbers, domestic sales grew 15%. However, the volumes also did grew to 15% with capacity utilization of 95%. Realizations improved by 4.5% on a year-on-year basis. However, there was a cost increase witnessed of around 7%. Operating EBITDA also saw an improvement to 1,060 rupees per million ton from 900 rupees per million ton. So clearly, since the last quarter, we did see an improvement in the operating EBITDA. At the same time, the company commissioned cement capacity of 5.6 million ton per annum, taking total grey cement capacity of the company to 126 million ton per annum for India. So clearly we did see an improvement in the volumes. We also saw an improvement in the realizations. However, the profit for the cement major did see a downturn of around 36%. So that's cement major Ultratech Cement Q4 FY23 results.
Thanks, Mansi, for putting that into perspective. So it's good numbers coming in, and then there are good numbers coming in on the GST front as well. In fact, the GST collection was at a record high this time around. 1.87 lakh crore rupees is what they clocked in the month of April with respect to the GST collections. It's a gain of almost 12% on a year-on-year basis, and for 14th straight month we have seen that the GST collections have been above the mark of 1.4 lakh crore rupees, which was the usual average that we had seen earlier as well. And of course there was the highest single day tax collection as well, which stood at over 68,000 crore rupees. So a massive collection when it comes to the GST bit as well. Let's welcome on board Mr. Sanjay Kumar Singh. He is the Commissioner, Commercial Tax and Principal Secretary at the Energy Vertical as well. Mr. Sanjay, hi. Thank you so much for making time and speaking with us. First up, a stellar number coming in as far as GST collection is concerned, 1.87 lakh crore rupees. Do you believe that this kind of number is what we should expect going forward as well?
Good morning. I think the GST collection during the month of April 2023 has really made record, not only nationwide, but even if we look at Odisha, we have had the all-time highest collection in the month of April 2023, and which has, in Odisha, we have crossed the mark of 5,000. And if we look at the GST revenue to be retained by the state of Odisha, we see a growth of almost 40% over same time, April 2022. And I think this growth is basically on account of buoyancy primarily in the service and the trading sector. In addition, I would like to say that the compliances are improving, increasing. If you look at Odisha, over last year, April 2022, our growth in number of e-way bills is around 15%. So I think compliances, the technology backbone which is there for GST, and the buoyancy in different sectors is helping the GST to grow. And in my opinion, it is the GST picture would be similar in times to come also.
All right. Thank you so much for taking time out, Mr. Singh. I just wanted to understand that apart from the fact that we do have improved economic activity, there has been, the effect of the second wave of the pandemic having completely receded. What are the other factors that you would attribute to this record GST collection?
As I said, one of the very important factor is improved compliances. The registration of business units is improving. I think ease of doing business is improving, and therefore people are getting more and more enrolled. The way under GST regime we are trying to plug the loopholes using technology, I think that is playing a very, very important role in improved compliances and in plugging the leakages.
Okay, so that's the case in terms of how we are expanding the network and how people are complying more as well. But just to understand with respect to the GST collections, is there any sense as to which verticals, etc., are contributing more? Is it the SMEs which are doing well? Is it the fact that the domestic transaction, etc., is higher? We have seen a lot of flying of goods between the country as well. Do you think the biggest, driver of this GST collection is consumption, and that's telling you the strength in the Indian economy at this point of time?
Of course. I will tell you about our Odisha itself. So this buoyancy is mainly because of the service sector and trading sector, and increase in the consumption. I think it talks a lot about the strength of the Indian economy.
Appreciate your time. Thank you so much, Mr. Singh, for giving us a view on the April GST collections and the record numbers that have been clocked in. Time for a quick break. As we do that, here are some top fundamental ideas from Sanjeev Bhasin. He's bullish on real estate stocks like DLF and Godrej Properties.
Who thought DLF and Godrej were beaten down to pulp? They'll be up 40% in a month. If you recollect, closer to January, we had given those as two of our topics. Now coming to numbers, ICICI numbers are superb. I mean, look at the gross formation, look at the lending, look at the cost of money, look at the NIMs. I think ICICI is going to 5 figures in the next maybe 2 weeks. There's no question about that. There are no two ways that India is going to outperform, and I'm very, very optimistic. By May, we should be closer to 18,500 on the index, and more than that, stock specific outperformance will continue.
Well, lots of stocks to talk about, so let's welcome on board Hemang Jani of the Motilal Oswal Group as well to talk about those. Hemang, hi, good morning. I want to begin by asking you about the auto data, because so far in the month of April, we have seen that it was the commercial vehicles which was on the back foot. The PV was suffering through the chip shortages, etc., and the two-wheeler were largely in line or a bit better than expectations. What do you think is going to be the trajectory going forward when it comes to the auto sales? Is it going to be PVs and two-wheelers which are likely to make comeback?
Good morning, Anisha. I think, yes, the numbers, there was no real big positive surprise. Maruti numbers were slightly below the expectations, and so is the case with some of the two-wheeler companies like Hero Motor. I think TVS numbers were slightly better. And on the CV side, versus the general expectations of being a strong revival and good numbers, Ashok Leyland numbers were slightly muted. Our overall view on the auto sector continues to be positive, as we think that despite 2 years of strong growth, the drivers are pretty much in place, particularly the passenger vehicle, the CEV side. Only tractor is a space where we expect some subdued performance, and we do like the names like Maruti, we do like Ashok Leyland, and purely from a monthly perspective, I think since TVS numbers were good, you might see some positive rip-off over there.
Hi Hemang, morning. Let's also get in your take as to how you've read into Kotak Bank's numbers. CLSA has downgraded the stock. You've got Morgan Stanley that's maintained an equal weight rating. They're saying that it's been a strong quarter and operating leverage has begun. Your key takeaways?
So the numbers were pretty much, good and slightly, in fact, better than expectations. What is important in terms of Kotak Bank is that the loan growth was slightly muted, but on most of the parameters, the company has delivered, good growth. The loan growth, the NII, the asset quality, and we think that you also have a case of some strong flows into the company. Because of the MSCI rebalance. So we think that Kotak Bank should do well. And currently we have a neutral rating on the name with a price target of 2050.
Let's also talk about Ultratech Cement, because the Q4 numbers were largely in line with expectations. The capacity expansion is also, on track. But the question now is whether, it's part of the valuation already, whether the cost benefits that Street was expecting was overhyped. Your take on Ultratech and the overall cement pack?
So Ultratech definitely the best play on the sector, and we expect the cement consolidated volume growth to be around 8% over the next 2 years. The debt has been declining sharply over the last few quarters, and we think that given that the operating profit per ton is on a positive trajectory, even this quarter they reported a very decent number. Next couple of years we are looking at a much stronger numbers. So we like Ultratech, and we feel that this would be one of the best performing stock. Apart from that, I think in the mid-cap space, one can look at Dalmia Bharat, JK Lakshmi Cement. These are the names that we like.
Okay, that's the view coming in on the entire cement space as a whole. But Hemang, also wanted to get in your take as to what the outlook is when it comes to, just banks as a whole, because it's been a tremendous month for the entire Nifty Bank Index. Do you still believe that there's a lot more steam left within the mid caps as well as some of the marquee names? And if you had to cherry pick your top 3 bets within this space, what would they be?
Absolutely, I think banking would be the forefront of this entire rally that we are seeing. If you look at the overall performance, particularly from some of the banks like ICICI Bank, some of the PSU banks which have reported numbers like BOB, they have been quite decent. HDFC Bank was slightly muted, but on the one hand, you have very strong numbers backed by credit growth and the NIMS expansion that is underway. Secondly, you have some flows. HDFC Bank will see a flow of about $4 billion. Kotak Bank will see about $800 million. And because of the pause that RBI has taken, we expect some improvement in the margins for many of these. So we do like the space. Our preferred picks over there are ICICI Bank, State Bank in the large universe. And within the smaller and mid-sized banks, we like IDFC First Bank. We think that also reported extremely good set of numbers, and there is a long runway of growth for IDFC First Bank.
So banking is something that is going to be at forefront, but what about the entire real estate pack, Naresh? Last month we had seen solid run on the likes of DLF, which was up around 20%. Godrej Properties was up 30% in the month gone by. Do you expect the rally to continue in the real estate names? And if yes, what's the top recommendation?
So the trend has been pretty strong for the real estate pack, and we've seen a new swing high as well. So DLF continues to remain the one of the top picks. The stock saw the first one to move out of a major range, went up to 425, 430 levels. Even on Friday, made a new swing high, and now the stock is on verge of taking out those 2021 highs. So DLF remains the first one. Second could be looking at some smaller names in the real estate pack, which could be Kolte, Patil, Prestige. Those are the names which have not yet given a similar move as compared to the rest of the larger names. So I would go with DLF and then pick a basket of smaller names. So something like a Kolte Patil, which is still available at the lower end of the range. Prestige, which has given a short-term breakout and is now in touching distance of the last 2 years breakout. So would start with DLF as the large bet and then take a basket of smaller ones.
Okay, just checking in on the movers on Friday's trading day within the broader markets, and you did have a terrific run being witnessed in the likes of a SEAT, a Z Entertainment as well propped up on the radar, and something like an Adani Transmission was a winner. Kunal, your view on the charts?
So out of the 3 names, SEAT, I think in fact the entire tire space looks very attractive. Apollo Tyres, Balkrishna Industries to a certain extent, MRF, they started to show signs of strength as well as solidity in terms of the trends. SEAT, something which had popped up over the last 1 month or so, started to pick up pace from the 1450 mark, which was the previous support for the stock price. So that's a good recovery for the stock. There is a long way up, for the stock to scale past above the previous highs of 2022, as well as even go past beyond that. So I think 1900 plus is the previous highs for SEAT on long-term basis, which means that the stock has to start performing exceptionally well and get into that trending mode. Apollo Tyres is a more stronger name from the tire pack, at least as of now. The stock scaling past above the 300 levels consistently and has been showing signs of strength, less amount of volatility as compared to the other names. From the other names to mention, I think Z Entertainment is something which I would clearly avoid. The clear reason for that is the lack of consistency of price trend for the stock. So even after a strong up move on Friday's trading session, you look at the price trends for Z Entertainment, it's been actually all over the place. The stock falling off from the 220 mark, going back towards that 175, 180 levels, and then bouncing back towards the 200 mark for itself, or close to the 200 levels. So I believe that the breakout has not yet happened for Z Entertainment, and the fact that the stock is not showing any signs of major consistency of price trend, I would clearly avoid the stock.
Okay, so it's an avoid coming in for Z Entertainment. But Hemang, there were a slew of earnings that we had to deal with over the weekend. Anything that stood out for you? The likes of SBI Card, then we also got numbers from M&M Financials, L&T Financial Holdings. The overall NBFC space earnings has been quite strong. Anything that stood out to you over the weekend with respect to earnings?
So clearly, apart from the large names that we covered, Mahindra financial numbers were pretty good. In fact, the street was actually poised for some sort of a disappointment. But versus that backdrop, the company delivered very strong 14% kind of a growth in the earnings, and even the return on assets and return on equity was quite healthy. So we think that NBFC as a space is poised to do pretty well. In fact, we have done certain upgrades in our earning estimates for next year. And this is one of the high conviction buys for us with a price target of 320 rupees.
All right, there you have it. That's the view coming in on some of those top NBFCs on the radar. In the meantime, let's also get in a view then, Kunal, from you as to what the outlook is on some of the stocks that really bucked the trend on Friday's trading day. Raymond, after seeing a phenomenal one-way up move, its stock came down about 7%. It wrapped up at about 1592. What's the outlook on that stock? And have you had a look at the charts as well of a CG consumer? It's been a newsmaker of late.
So I'll start off with Raymond's. I think that stock, after the news flow which had come back for the stock, I think has gone to a correction. So maybe you can call it as buy on rumors and sell on news for a confirmation for the stock. But then I think the Friday's candlestick pattern is not encouraging, and this could probably dent the prospects of the charts for at least the near term, because it's not just formed a bullish or rather bearish engulfing pattern for Raymond, but I think the fact that the stock has managed to close back towards a 3-day swing low, I think that's a concern for the stock price, which means the 1740 mark approximately, which was the high Raymond had made on I think Thursday's trading session, that could now act as a major resistance. And I think my sense is that the rallies towards the 1700 mark could be taken as an opportunity to try and book profits for the stock price. So I would probably expect the stock to remain under pressure for some more time, or at least the breakout not to happen for the stock over the near term. So that's a stock which I think traders could look to book profits. CG Consumers, on the other hand, the stock, even though it's gone into a decent uptrend over the last many weeks, specifically in the month of April, but I think the stock price trends are still a lot more inconsistent. The prices, or rather the stock fell on in terms of higher volumes on Friday's trading session as well. So I think at 250-55 levels, would expect at least another 5 to 7% correction on the stock.
I want to ask a very basic question to you, Kunal, which is that how will May be different from April? April was the comeback month. Nobody expected markets to pole vault. Do you think law of gravity will kick in May somewhere?
Yeah, I think I would sense, Nikunj, so what happened is in the last 1 month, we managed to respect those strong technical levels, whether it's support or resistances. So for example, we were discussing 17,800 sometime in the mid of April, that could be a point where the markets may take a bit of a pause as well as scale down a bit. We saw that almost exactly in 17,850 is where we managed to hit first on the index. We scaled down some 300 points, so that process took at least 2 weeks for the markets, and then we managed to move up higher and scale past over the 18,000 levels yesterday, or rather last week. Now the next major resistance for the index is at 18,200 levels. So the fact that we are nearing towards that zone, and assuming if the SDX Nifty, which is showing at 130 points uptake, so if you manage to come back towards that 18,200 levels, I think it could be a zone where we may start to see some bit of consolidation over here. So my sense is maybe not a major correction on the indices, but at least a pause which could happen on the index over the very near term.
All right, that's the view.
I have IDFC Bank, which in a sense really is that turnaround stock today, and I will not be surprised that if you have to identify among so many numbers which came out over this long weekend, which is a standout number for me, it's IDFC Bank. I was looking through the numbers, going through some brokerage reports. Morgan Stanley, which always has had a bearish view on IDFC Bank, has now turned bullish. Motilal Oswal, Namuma, CLS, all of them have come out with a very simple analysis, which is that it's a bank which is at a cusp of a multi-year transformational growth. Cost to income ratios are coming down. CASA deposit seems to be not a problem. And if you are in an environment of benign credit growth and decent, and if interest rates are picking out, then a franchise like IDFC in a sense could really be at a stage of explosive growth. And Hemang Jani, we've had a lot of yes and no with IDFC Bank. The believers are saying that this is a bank which could pole vault, but the naysayers are saying that it's a bank which is too small and it will always have a struggle for liability.
So Nikunj, I do remember the interview you did with the management of IDFC Bank, and what I felt was that this was a moment where there was a major transformation. Why IDFC Bank was not performing for all these years? Because its liability franchise was not very strong, and that led to a belief that till we see numbers, till we see the transformation, people would not want to participate there. But last, I think 1.5 year, that transformation has played out extremely well. Now, if you look at the CASA ratio, it is 50%. And because of the confidence that is there in the deposit franchise, now the management is sounding extremely confident of driving this growth through other activities like commercial bank, credit card, home loan. So overall, we think that this bank can deliver a very strong growth over the next 2 to 3 years. And it is one of the high conviction buys for us with a price target of 75 rupees.
Meantime, I wanted to get in your take then, Naresh, on the charts for an RVNL. That stock has been the cynosure of all eyes, terrific run-up in any time frame that you look at, particularly over the last 1 month or so. What's your view on the charts?
So technically, the stock gave a breakout about the 80 mark. Whatever was the possible short-term target is done. Stock is overbought at around 110 to 120 levels. What is concerning is the fact that the delivery volumes were not great in this move. And over the last 3-4 sessions also, the delivery volumes have been relatively lower. So out here, it is a place of time where you don't want to buy at current levels, because the stock can correct back to 1995 also. And that is where it would be a 15% drop. So your stop losses do not make sense out here. So if one is holding on, one could actually be looking at reducing positions out here. The stock, after such a move, can have a period of sideways for the next few weeks at least, maybe go down to 1995 as well.
Okay, so that's the take as far as some of these big movers are concerned. But Hemang, wanted your take regarding the entire pharma pack. What's the top recommendation that pack has been in a lot of news flow? And this morning we just got news as far as Sun Pharma is concerned as well.
So pharma has seen a pullback in the last about 1 month or so, and the numbers have been mixed. So I think it makes sense to be far more selective. I think we are also going to have a very interesting listing of Mankind Pharma, so that could also bring about a certain amount of excitement in this space. We have been liking Sun Pharma, we have been liking Dr. Reddy's to some extent. But because of the issues around this generic business, we are not very confident of the overall sector. I think we'll have to go with names like Sun Pharma, and to some extent we could also look at Ajanta Pharma and Alchem Lab in the mid-cap space.
I'm going to take a leaf of our interaction with Kumar Mangalam Birla at the ET Awards, and specifically when ET now asked him that which are the two companies which are at a transformational stage of growth, it was quite clear. Aditya Birla Capital, something which we I think have discussed on a daily basis, that how Vishakha Mulye is trying to turn the wheels of the business. It's a large business. It's an NBFC which is backed by the Birla Group, and yet they've done nothing close to what a Bajaj Finance has done. And second is Aditya Birla Fashion. While Aditya Birla Capital has got all the right ingredients, I think Aditya Birla Fashion is where markets are saying that are they spreading themselves too thin. We'll play out an excerpt of our interview with Mr. Birla a little later, but I want to just go back to go back to Hemang on Aditya Birla Fashion. Hemang, here's one company which has a promise. It has got great brands, but aren't they spreading themselves too thin? Sometimes they're acquiring designers. Now they're expanding in ethnic. Few years ago, they acquired Pantaloon. It's a Birla Group company, but they're dipping their toes in just about every available men's or women's category.
Yes, Nikunj, they have been aggressive in acquiring brands and expanding their footprint, and they are also kind of learning and dynamically changing their business model basis the latest trends. So last, let's say about 2 quarters have been difficult for the retail space. The numbers have not been good, but when you look at the overall, growth, being good and trend, let's say for example, reported 75% kind of a top line growth. That shows that the overall consumption story is not that bad. Yes, because of either raw material changes or operating costs, the operating numbers have not been great. So I would rate Aditya Birla Fashion as one of the companies which will remain there as a top company in the retail space. And the stock has corrected. So typically you should be buying into such franchise when the sentiment is not good. So I do think that names like Aditya Birla Fashions, Trend should do well for investors even from current price levels.
It's a very good time to be investing by corporate India. I think that so much has happened. NPAs are not there. Most corporates have delevered. The economy is on to a decadal 7 to 8%, 6 to 7 to 8%. That's huge for any large economy in the world. So I think that it's a perfect setting almost to be spending on capex and growing.
You're expanding all your businesses from paint to cement, even fashion, financial services. Given that we've seen a normalization in global growth and the sugar rush post-COVID is getting over, what's your view?
So I think, it has its impact, but at the end of the day, at least for us, we're building businesses for the long term. I don't think 1 quarter, 2 quarters, even a year matters as much. We are an integrated part of the global economy. India is. So you will have oil shocks, you will have commodity prices. So I think agility, risk management have become more important than ever before. And resilience, something that the COVID left us with.
I'm going to quote one of your comments that you have the right to win in the cement sector. And this comment came when after a big M&A happened in the cement sector. You still feel that you're committed in the cement sector, you have the right to win?
Absolutely, without a trace of doubt. We've been there for more than 40 years. Very deep roots across the country in the business. We understand the business very well. I think the repository of talent and knowledge is huge. So pretty much I stand by that.
You are now challenging the paint industry with that big capex which is coming via Grasim. Any of the other industry which you are looking at challenging now?
No, nothing really. I mean, we're also not challenging. We're not coming in from a challenger's mindset. I mean, we are making an investment that's complementary to our existing businesses. And that's how we are viewing it. If in turn it means that we're going to challenge incumbents, so be it. But that's not the driving factor. The driving factor, I think, is the fact that there is huge value creation opportunity for us.
All right, interesting there, getting a view from Kumar Mangalam Birla on the overall business. Just about waiting for the pre-open rates this morning, and given the fact that we're closely eyeing the Asian markets that have been a little bit mixed, we're looking at that interest rate decision as well that will take place in Australia, and then of course with the US, all eyes on what exactly emerges from the Fed meet. But you had the US markets which wrapped up absolutely quiet on Monday's trading day. So in light of that, it could potentially be a muted start, given that that's exactly what the SGX Nifty was indicating. So that's the pre-open rates as well that are reflecting on your screens. That'll just come up for you. But let's get in those mid-cap trading calls as well. And Kunal, what is it that you're tracking on the charts today?
So that'll be a buy on Voltas, and it's more of a contra buy because of Friday's candlestick pattern. It was a classic hammer pattern for Voltas on the daily charts in terms of candlestick, and this could be an indicative that a major bottom could be at place after a major selling for the stock. So would go for a contra buy, targets of 900 over the near term and stop us at 750.
All right, Voltas it is. That's what Kunal is recommending with a 900 rupee target price. Naresh, your mid-cap call?
So that would be a buy on Federal Bank. The stock is given a triangle breakout. The charts are looking interesting in terms of the fact that one of the few mid-cap small-cap banking banks, which is at a new 52-week high and an all-time high, very close to it, just 35% away. Relative strength as such on a shorter-term time frame as well as longer-term time frame. Expecting a fresh move into new all-time highs. A stop loss at 129 and a target price of 150.
Okay, Naresh, so that was the take coming in as far as Federal Bank is concerned and how you are positively poised on that. But Hemang, your take as far as the entire other spaces are concerned with respect to the earnings that we have seen so far. and also the fact that we have seen a bit of pullback when it comes to the new age tech names as well. You recently initiated coverage on Paytm as well. There were a lot of notes on Zomato as well. What's your take on the new age tech, and what's wrong with Nykaa? Why is that not pulling back?
So I think overall, when we look at the new age companies, recently we have initiated buy, call on Zomato and Paytm, and the reason why we like some of these companies is that, on the one hand, the market caps have actually come down by about 50-60%. And when you look at the actual underlying operating performance, it has shown a lot of improvement. And we think that some of these companies, once they reach a certain level of operating profit or EBITDA, can actually grow very fast. And particularly Zomato, we think that there are just two players. We don't see anybody really coming and challenging them. And though there have been a lot of management exits and few things have happened, but the sheer numbers are really growing big time. So we are expecting these companies to turn profitable soon, and the growth visibility is going to be very good. So we like these two companies. Nykaa, I think, what has happened is that the absolute numbers and the conviction in terms of the numbers is pretty much missing. So I think, because the bigger companies are entering into the space, maybe people are slightly concerned as to how profitable this company can be, how long they can continue to grow at a certain pace.
And we know it's not really a big, investor friendly space anymore, but the entire oil and refinery space is something which is going to be in focus today as well, because the Singapore GRMs crashed as much as 70% in one day. From $2.7 per barrel, it's down to the level of sub $1 per barrel. I know it's a one-day move, and it's more likely that it might turn around soon as well. But Himang, any take as far as the refinery names are concerned? Chennai Petroleum came out with its earnings. The dividend announcement was rather strong, and we saw a big rally on that counter. Reliance also managed to report a decent set when it comes to O2C segment. What's your take, and any favorites?
So we do think that a lot of moving parts are there. The GRMs are showing a lot of volatility, but when we look at the overall business, let's say Reliance, I think it has delivered a steady set of numbers, and some of the other businesses are still doing pretty well. I think retail is going to be a big driver over the next couple of years. And O2C, maybe there could be a little bit of volatility. Overall, we do not think there is going to be any excitement. Neither do we expect any major correction in the stock. But yes, from a dividend yield perspective, some of the names like MRPL or Chennai Petroleum can be looked at.
Just taking a look at some of the pre-open rates, they of course haven't settled at this point of time, but Blue Star is showing a spike of almost 7 to 8%. The company is likely to consider a dividend on May 4th. So let's pull up the pre-open rates if we have of Blue Star, because that's perking up almost 5 to 6%. You also have IDFC First Bank, which is reacting quite positively to the earnings because the numbers were better than expectations. We saw the brokerage upgrades come in as well. Chola Holdings, Edelweiss Financial are some of the other big movers, and then Adani Green also on account of the numbers is up around 5%. Birla Soft, RVNL, those are some of the other counters which are holding up in the green. On the losing side, you have Atul Limited, which is on the back foot. CDSL, Nilkamal are some of the other stocks. As far as the entire metals pack is concerned, Himang, is there a case to be made to invest into those names at all, or should one should stay away from the metals pack given the kind of cyclicality and the volatility we have seen?
I think the short term, things are going to be slightly dull. But when we look at, some of the metal companies, particularly Hindalco, or some of the, domestic focused companies in the steel space like JSPL or NMDC, I think these companies should do relatively better because of the overall volume growth expectations that is there. And we are seeing some stability in the overall margins of the spreads. So yes, that sector is not, in the best of the times in terms of earnings or sentiment. But typically, when the economy is going to show good growth, at some point you will see interest coming back into the names. And Hindalco is our top bet over there. And apart from that, JSPL and NMDC are the ones that we like.
All right, Hemang, it's been good to have you on board. Thanks so much for sharing with us all those top stock recommendations and view on the markets. Here are some of the other top stories that we're tracking. Morgan Stanley is preparing for a fresh round of job cuts amid the renewed focus on expenses as recession fears have delayed a rebound in deal making. Upper levels are discussing the elimination of as many as 3,000 jobs, amounting to 5% of the global workforce by the end of this quarter. Meantime, the finance minister has reached the Republic of Korea for her 4-day visit to attend the Asian Development Bank meet. She'll be interacting with economists and senior executives of global organizations, as well as meeting leaders and the Indian diaspora. The 10th outbound flight carrying Indian evacuees from Jeddah under Operation Kaveri saw 231 passengers en route Ahmedabad, according to the MEA spokesperson Arindam Bagchi, who put out the latest tweet.
IMD has issued an orange alert in Shimla for the next 3 days as well, and that's because we have seen heavy rains being lashed in the city in the last 24 hours. It's rained all over the state, with Kangra receiving the maximum rainfall. There have been reports of hailstorms in Shimla as well as Jabal region. Moving on and talking about what's happening in the world of sports, then Lucknow Super Giants mentor Gautam Gambhir and Royal Challengers Bangalore Virat Kohli have been fined 100% of their match fee for breaching the IPL code of conduct during a match at Sri Atal Bihari Vajpayee Eknav Cricket Stadium, Lucknow yesterday. Both admitted to level 2 offence under Article 2.21 of the IPL code of conduct. So those were the big headlines coming in as far as the national and international news is concerned. But you also have the fashion's biggest night, Met Gala, which just happened on an overnight. This year, your favorite stars would be celebrating the theme of Karl Lagerfeld, a line of beauty, with looks inspired by the iconic designer's work as well. Alia Bhatt has made the Met Gala debut this year. Prominent names like Penelope Cruz, Doja Cat, Rita Ora, Dua Lipa, as well as Priyanka Chopra and Nick Jonas have been the ones that have been spotted at that Met Gala. So a lot of interesting couture there, Avan, and Met Gala, as always, is something that is much talked about in the fashion world.
Absolutely. You had the who's who actually showed up, a lot of people as well that represented from India. So it certainly was a night of glitz and glamour. All right, let's move right on then and also tell you about the glitz and glamour, because we had some of the top voices of India Inc., the Oscars of the red carpet, and the Oscars of the, corporate world as we like to call it, the Economic Times Awards that took place Friday evening, and some very prominent and marquee names from the corporate world as well as from the world of markets. Let's find out then what the index calls are from our chartists this morning. What exactly are they advising after we've breached that 18K mark? Book profit, says Kunal, but the rest of our chartists, they believe that it's a hold recommendation on the Nifty index this morning, and therefore majority wins. It's a hold call on the Nifty index. It's been a power-packed Friday as well and a power-packed month for the Nifty Bank, but it's totally divergent calls. Book profit, says Kunal, hold according to Nuresh, and Santosh says you can look to buy the Nifty Bank index. In fact, I just want to get in Kunal's view in greater detail on the Nifty index in just a moment. And Kunal, what's that rationale of booking profit? So you believe that we've run our course when it comes to the Nifty?
I think we are hitting or we are coming closer to that breakout of rather retest to the previous resistance of 18,200, and that is one of the reasons. So I had a similar stance at the 17,800 mark, or when we were just closer to that 17,800 levels, that it makes sense to book out profits on the indices and wait out for a correction of 300-400 points to try and buy back on the index, because then the risk reward would be a lot more attractive. So buying at 18,200, because the SGX was actually showing 130 to 140 points uptick, so we were as close to that 18,200 mark. So I think at that point of time it makes a lot of sense to book out profits, because you are nearing a major resistance. And that is the only rationale. So in case if the indices step back towards say 18,000 mark or slightly below, that could be a point where I would look to reinitiate and go into that buy mode on the index.
Okay, there you have it. That's the view coming in on how to really play the index. And I'm curious, Nuresh, as to where it is that you're finding opportunity within the entire auto space?
So in the auto space, there are two clear winners as of now. One is Bajaj Auto, which has given a breakout into new 52-week highs, all-time highs. And that becomes a buy on dips, because that's the stock which has come up after a 2-year gap. Second is Tata Motors, which has given finally a breakout after 12 to 15 months of correction. The stock gave a big gap up move, and going forward at 460 to 480 remains a buy zone, wherein the stock could go towards a new all-time high. So these are the two places. One is two-wheeler, one is four-wheeler. So these are the two names which I like in the auto pack.
Interesting. It's the four-wheeler and two-wheeler space that has caught the attention of Naresh this morning. But what's catching attention with respect to the stock moves is definitely RBL Bank. That's on the back foot. You have Adani Green, which is likely to open higher. RVNL really continues that momentum. 112 on that counter, 5% higher is what the pre-open rates are suggesting. But Kunal, wanted your take regarding RVNL as well as Blue Star. Both of these stocks look like they're going to open with a bit of a green tick. Would you be a buyer in either?
Yeah, I think I would probably be looking out for RVNL because we were discussing this some time back that even after such a steep run of 40% in the last I think 1 week or so for RVNL, the trends are still a lot more stronger. Yes, the risk reward may not be very attractive at the 115-20 mark for RVNL, but then when stocks get into such a kind of a breakout mode, they tend to they hardly give such kind of a strong opportunity of getting into an ideal risk reward. So you may start buying at current levels. Of course, the position sizing would be a lot lesser at current zone, and in case if the stock dips back towards say 105 mark or 100 levels, say over the next 1 or 2 weeks, that could be an opportunity to maybe add on further for RVNL. But I think at current levels, I would be keen to looking to buy the stock.
Okay, so that's the take as far as RVNL is concerned. Let's take stock of what other stocks are moving, at least from the frontline index. Axis Bank is likely to open with a gain of 1%. Wipro, despite the disappointing set of numbers, it's a buyback which seems to be supporting the sentiment. Opening perhaps 1% higher is what the pre-open rate is suggesting. Kotak Mahindra Bank, despite reporting a great set of numbers and thumbs up coming in from a lot of brokerages, is seeing a bit of downtick because going forward, that CEO transition is likely to be a bit of overhang. So that's why that counter looks like it's going to open on the back foot. Hero MotoCorp, no excitement actually coming in from the entire auto pack. Let's pull up some of the other auto names as well. Eicher Motors as well as TVS Motors, Escorts, anything that looks interesting at this point of time because the numbers were rather tepid. In fact, Maruti disappointed quite a bit when it comes to their performance of the overall numbers is concerned, and then the result reactions will come in. IDFC First Bank, M&M Financials, L&T Financial Holdings, these are some of the counters you need to watch out for. Even SBI Card for that matter, Vedant Fashion, some of these names will definitely be in action today. But Kunal, just with respect to the index itself, Bank Nifty was something that was doing well. Is that likely to be the case going forward as well?
Well, it can continue to outperform. I think at 43,000 plus mark for the Bank Nifty, we've established a new base or a support for the index. So 42,500 would now be a key support for the banking index. But my only sense is, getting into a fresh buy mode at these levels, which may ideally not be a good risk reward. So for traders who are holding on to the long positions, for them it's easier to trail the stop losses to 42,500 mark and continue to hold on. But for traders who are looking at a fresh buy at current levels, I would believe that the risk reward will not be very attractive because on the upside, if you're looking at 44,000 as a near-term target and 42,500 as a stop loss, the risk reward is less than 1:1. So it's good for traders who have been holding on to the long positions, for them trail the stop losses and continue to hold on.
Okay, so that's the take coming in. Just 20 seconds for the opening bell to ring, and it's look like we are going to open with a bit of a green tick. 18,125 is where the Nifty has settled at this point of time. Of course, overnight we saw a bit of mixed cues coming in from across the globe, and there's the Fed event which is lined up for tomorrow. So ahead of that, there might be a bit of a tentativeness, but it's still showing a 60-point uptick as far as Nifty is concerned. Let's see whether that sustains once we open and whether we consolidate around that level or not. So the first rate is out. 18,120 is where the Nifty has opened at. But look at the market breadth. That really is the highlight for me. 1,300 stocks advancing to just 272 stocks declining. And that's telling me that perhaps the mid-cap index and the small-cap index are likely to be outperforming versus the frontline index. Sensex 2 opened with a gain of around 0.3%. A lot of names which are doing well, but sectorally speaking, it seems to be the PSU banking names which are starting with a green tick. You also have the metal names, etc., which are holding up comfortably in the green. Let's talk stock specific and see which are the big movers. Starting with RVNL itself, because it's open with a 5% gain. Adani Green is also sitting high by around 4% on account of result reaction. Blue Star, which is going to consider a bonus issue come May 4th is seeing a reaction of around 4%. IDFC First Bank, the numbers were great. Saw an upgrade coming in from Morgan Stanley, so a 3% gain coming in there. Then you also have the likes of IRB and Aarti Drugs, which are reacting positively. Aarti Drugs, of course, reported its numbers. You also had other stocks which are moving on account of the updates coming in. Hero MotoCorp, for instance, is down 3% after the monthly booking failed to infuse the market, so almost a 2 to 3% cut coming in there. RBL Bank, the numbers were a bit mixed, so 2% cut coming in there. Zomato is starting on the back foot today, so 1.4% lower. Seat, Coforge, all of these stocks seem to be reversing the kind of gains that they had made last week. L&T Financial Holdings is also result reaction. We are seeing a cut of almost 1% there. And SBI Card 2 is seeing a downtick, a mild downtick at that. Not big movers this morning. And even if you look at the volume buzzers, it's the likes of IDFC First Bank. Let's pull up Kotak Mahindra Bank as well, because the numbers were quite solid, but it's just that the market is not giving it a thumbs up, given the fact we have seen that there would be a CEO transition happening. So pretty much flat for Kotak Mahindra Bank. Ultratech Cement too, wherein the numbers were a bit higher than expectation, should be getting perhaps a thumbs up, or okay, just a flat lining as far as Ultratech Cement is concerned. Let's look at some of the oil marketing companies as well. Reliance Industries, ONGC, MRPL, Chennai Petro. The GRMs had crashed quite meaningfully. So let's watch out for these names as well. Again, separately, Vedant Fashions, wherein the revenue was up around 15%, but the margin was flat. So pretty much flat reaction coming in for the counter as well. Not other big movers that I can spot at this time or at this point, Avan, but looks like Hero MotoCorp, when the numbers were much lower than expectation and the sale was down on a year-on-year basis, is getting a bit of dropping this morning.
Yeah, and then there's Bajaj Auto as well to react to right now, as the April auto sales are trickling in at 3.31 lakh units. I think that's pretty healthy that they've reported, given that we were working with an expectation of about 3.14 lakh units. So that's the total sales number, which has seen a bump up from last month of 2.9 lakh units. Let's get in a view from our chartists then. What's the view, Kunal? What are you looking at on the screen?
So it seems like a good start for the indices. Again, 70 point on the Nifty, but we are closer to that 18,200 mark. So I think the closer we are towards that level, it could be a point where I would look to start booking out profits. In fact, the opening trade which I would be looking out for would be to try and book profits on L&T. That's a stock which I initiated a buy, I think at 2,200, 2,220 levels, almost a week and a half out back. So that's a zone. I think at current levels of 150 points from those levels, it's a good time to try and book out profits and then maybe go back towards the traditional larger cap names over here.
Okay, so that was the first trade, book profits on L&T. Naresh, what about you?
That would be a buy on Tata Power. The stock has done nothing for a long period of time. It's given a small breakout in the near term. So keeping a stop loss at 199 and taking it for a move towards 210 and 230 in the short term.